all of America's gold, it's like 99.7% of America's gold backs the U.S. Federal Reserve note, the cash that is in your wallets. 92% of the currency supply is bank credit. It's not created by the Federal Reserve. If it's digital, if it's in the bank and you've got numbers representing U.S. dollars, it's not Federal Reserve notes. It wasn't created by the Federal Reserve. It was created by the banks. But the Federal Reserve notes that are in your wallet are currently backed by gold at, I believe it is 0.4 cents per ounce, not dollars, but cents per dollar.
Mm-hmm.
And so to adjust that to a rate where the currency in circulation would be fully backed, fully redeemable in gold, requires about $12,000 an ounce.
Mike Maloney, monetary historian, gold and silver advocate, and founder of goldsilver.com, delivers a powerful update on what he sees as a historic monetary reset. According to Maloney, only a tiny fraction of the U.S. currency supply is backed by gold. The Federal Reserve note in your wallet? Backed by just 0.4 cents of gold per dollar. Gold would need to be priced around $12,000 an ounce to back the money in circulation fully. With insiders taking delivery of physical gold and the gold-silver ratio near 100, Maloney believes we're witnessing the early stages of a massive shift, possibly the biggest since the end of Bretton Woods. Margin hikes and manipulation may rattle silver prices in the short term, but Maloney remains heavily weighted, 95% in silver, betting on a future where silver dramatically outperforms gold. Now, we present the latest clips of Mike Maloney's video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Trump, in his second term, lose by being the one that stops kicking the can down the road. It really looks like we are no longer going to kick the can. All of the pain of every previous administration, going all the way back to Nixon, all of that, all of the cheating on the world monetary system is all going to come to an end during this administration, and it's going to be big. And what saddens me, right now, we're seeing these huge inflows of gold, and we're seeing the gold price going up. But then I've got some evidence here that really shows that this is the whales taking delivery, and insiders, people that are connected with the government that know what's going to happen in the future. In here, we've got the gold price. If you could click on that, Alan. Gold is currently back up near 3,100. So it fell a day or two ago, and now we're back up toward 3,100 again. And if you could click on silver now, silver took a bounce. There was an intraday, I think it was yesterday, where it was up at 109 or something like that. Not silver, but the gold-silver ratio. So we're back up at 31, and it was down at below 29. And I may still be making a purchase. My insiders will find out what I do. If you can click the gold-silver ratio, this is the historic part. This is why it is exciting to be alive right now. 99.1. Over the last 2,500 years, the time that it's been where silver has been this undervalued compared to gold is measured in just weeks, just a few. And the thing is that the reason it's here is toward the end of last week, the Commodities Exchange increased margin requirements on futures contracts by 25%. And that meant a whole lot of people that were out on margin either had to come up with the extra or sell some of their position. If they sell their position, silver drops. And so that was the reason for the drop and the reason for the sudden bump in this gold-silver ratio. So I find these very exciting times to be alive. And if you look at exponential growth, we are seeing something right now that is very exciting. We could see the blow off top and in gold and silver this year. It could be happening this year. It might take another 2 or 3 years. We'll see how this Mar-a-Lago Accord goes. And if you've got the Secretary of the Treasury saying that there's going to be a new world monetary system, and that's in my book. I said that this was going to happen a couple of years ago. It's like 3 or 4 pages on it, and it's very entertaining, by the way. So if he said there's going to be a new monetary system, and another clue, he said we need a Bretton Woods 2.0, that's connected with gold. And then in a Tucker Carlson interview, he said how much he loves gold, and part of the funnest time of his life was when he was running his funds, and people called him a gold bug. And so these things are lining up to where something extraordinary is coming true. Now, people don't think that there's all these new monetary systems. Why? Because it only happens once in a lifetime. And we are, or maybe twice. I was alive during Bretton Woods. During the end of Bretton Woods, when Nixon took us off but I wasn't alive when the Bretton Woods conferences happened. So I will see it twice in my lifetime. But you weren't alive. You were born under the global dollar standard. It's been the best performing asset class of this century, other than crypto. But when you start at zero, going from 0 to 1 is an infinite return. So you can't even measure crypto. Now, Dean Raymond says, should I sell gold and buy silver? I've got a lot of silver, and I'm about 95% silver and 5% gold. But I am considering buying some more silver, and there is a possibility I might sell some gold and buy some silver right now. I never give advice, Dean, but you need to follow your own heart. Here's what I can say. If you're going to do that, there will be times where you go, oh my God, I did the wrong thing. You're going to say that simply because silver is so volatile. It's going to be a wild ride. It's an easier market to suppress than gold. Can't remember what it is right now, but back in the 80s, the silver market was 1/300th the size of the gold market. You just look at the futures contracts and the times the price, what the value is that's being traded. And so it's much easier for the powers that be to try and manipulate it. But the free market overwhelmed all of the manipulations that they were trying to do. And it just shot past. It took until late 79 for silver to really show the big returns against gold. And it dropped to a gold-silver ratio of just 14. Currently, we're up at 99. If it drops to 20, you'll have 5 times the performance of silver compared to gold. I think it could actually be 10 times just because of all the pressures that are built up and because there isn't that much above ground silver. We've had a deficit now for the past 4 or 5 years where less silver is being dug up out of the ground than is being used up in industry. And so all it takes is monetary demand. Once gold gets a little bit too expensive and people are saying, oh, wow, it was only $250 back in 2001, and now it's $5,000 an ounce, I think the silver is a better bet. So, and then suddenly you're going to see that gold-silver ratio plummet. And so, yes, I think a very good strategy is trading gold for silver right now. And I do want to mention, a little plug for my own company. If you have if you've got a storage account with us, or if you have InstaVault, these things become very instant. You can sell your gold and buy silver very, very quickly.
Mike Maloney warns, this could be a once-in-a-lifetime monetary reset. From Bretton Woods to today's fragile dollar standard, the signs are clear. Insiders are preparing, gold is rising, and silver is historically undervalued. With industrial demand outpacing supply and a gold-silver ratio near record highs, Maloney sees silver as the ultimate asymmetric bet. When monetary demand kicks in, silver could explode. His message? Don't be surprised by volatility. Be prepared. As always, Mike doesn't give advice, but his strategy speaks volumes. Share your thoughts on John Reed's analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.